Hello and welcome to another episode of Deep Dive brought to you by NewsX. My name is Vineet Malhotra. India is one of the world's biggest sugar producers and the world's largest consumers. Yet for the first time in nearly a decade, the government has now opened the door to sugar imports. Well, the centre has allowed duty-free imports of up to rupees 10 lakh tons of raw sugar under a tariff rate quota. With the window open until the 31st of October, the move is a direct response to a sharp rise in domestic sugar prices and concerns over tightening supplies. So the big question is, why does India need to import sugar at all? The first reason is simple. Domestic stocks are getting tight. India entered the current sugar season with lower opening stocks, with reports putting the decline at around 20%. At the same time, production has not been comfortably ahead of domestic consumption. Industry estimates have suggested that net production for 2025-26 season could be close to the level of annual consumption, meaning there is much less buffer left in the system. And when that buffer disappears, even a relatively small supply shock can send prices high. That is exactly what India is going through. Sugar prices have risen sharply in recent months. Reports state that domestic prices have jumped by almost 40% in 2 months, while ex-mill prices have reached record levels. Retail prices have also risen, with the average price reaching around 52 rupees 30 paise per kilogram in mid-August, compared with about 46 rupees a year earlier. But why has supply become so tight? One important factor is sugarcane production itself. Sugarcane is a water-intensive crop, and weather conditions have a direct impact on yields. Weaker crop yields in key producing states have put pressure on the sugar balance, and the government and industry have also had to revise production expectations during the season. Sugar production in the current season is expected to be around 306 LMT compared to the initial estimate of 343 LMT. India normally produces around 320 to 340 LMT of sugar annually against domestic consumption of about 280 to 290 LMT. On an average, India's sugar demand during the festive season in itself is estimated to be around 100 LMT. The global sugar deficit for 26-27 is estimated to be around 33 LMT. Concerns over weather conditions have further affected the global outlook. As a result, international sugar prices have risen sharply from $474 per ton to $552 per ton on the 20th of August, an increase of over 16% in less than 2 months. While many have linked this to ethanol production, the government has clarified that this is not the case. The share of sugar diverted for ethanol has declined from around 12% to around 9%. Moreover, nearly 3/4 of the ethanol produced in the country now comes from grains, particularly maize. Earlier in the season, the government had allowed sugar exports after expecting domestic availability to remain comfortable. But as the season progressed, supply conditions turned tighter than expected. Industry sources have questioned whether production and stock estimates were too optimistic, particularly as domestic consumption continued to draw down inventories. Now, the government is effectively trying to correct that supply imbalance, and timing is critical. India is entering its peak sugar consumption period from August through November. Festivals including Ganesh Chaturthi, Dussehra and Diwali drive up demand for sugar as sweets, confectionery and other food products see a seasonal surge. That is why the government is now relying only on imports. It has also tightened stock limits from September 1st. Bulk consumers using more than 10 tons of sugar a month will be allowed to hold only 15 days worth of inventory instead of 30 days. The idea is to prevent hoarding and stop large buyers from building up stocks while prices are rising. The import decision, meanwhile, is designed to bring fresh supply into the market. The government is allowing 1 million tons of raw sugar duty-free, with eligible mills and refiners applying for the quota. Port-based refineries could also release part of their existing imported stock into the domestic market, potentially adding around 3 lakh tons of sugar almost immediately. The bigger story, however, is that this is a major policy U-turn. India has spent years managing sugar supply through export controls, domestic sales quotas, ethanol policy and stock regulations. Now, instead of looking outward to export surplus sugar, the government is looking abroad to bring sugar into India. And that tells you just how tight the domestic market has become. The imports are not necessarily a sign that India has run out of sugar. Rather, they are a preemptive move to rebuild the supply buffer, cool record prices, and ensure that the festive season does not turn into a sugar price shock, but there is a cost. More imports mean more competition for Indian sugar mills, which explains why sugar stocks fell sharply after the announcement. So India's first sugar imports is nearly 10 years. In 10 years are really the story of a delicate balance between consumer prices, farmer incomes, sugar mill profitability, ethanol demand, and food security. And for now, the government's priority is clear: get more sugar into the market before the festive season pushes demand even higher. Dr. Sharad Kohli, senior economist, is with us on the program. Dr. Kohli, a pleasure to have you as always. Well, I've said in my opening monologue that this is an anomaly because of various reasons. What I would like to understand from you is, Dr. Kohli, is this also a cause of concern when it comes to India's sugar production? Of course, the ethanol factor is completely different. But when it comes to sugar production, India has mostly been an exporter or a large manufacturer of sugar and sugarcane products. Why this shortage?
Good evening, Vineet, to you and the viewers. Indeed, I mean this is surprising many experts that what suddenly happened from being a sugar surplus country to being a sugar deficient country. I mean, what factors have contributed, which is why the needle is pointing towards ethanol. That did a lot of sugarcane go into ethanol. Well, was petrol's gain a sugar's loss, or shall I say loss of confectionery, loss of sweets? What we gained on petrol was lost on sugar. That's the question which everybody is trying to dwell upon. But the fact of the matter is that India produces about 33 million tons of sugar annually, and our consumption is about 28 to 29 million tons. Now, it's not that in this particular year we have started eating sweets more or we've started consuming sugar more. You know, weather may have played truant a little bit. We haven't really seen the El Nino effect majorly until now. Rain shortage in some parts of the country, but nothing which is like a situation of a drought. Floods have been there in the eastern part of the country, but not major floods. As far as whole country is concerned. So nothing drastic has happened on the weather front, first of all. So what led to short cultivation? My own reading says, Vineet, that when the news of ethanol came and when the news of El Nino came, this is what my analysis says. A lot of hoarders and black marketeers, they had hoarded sacks and sacks of sugar in anticipation that this time, because a lot of sugarcane may be probably diverted for ethanol, and this time because of El Nino, sugarcane production may be impacted, they started stocking. And this stocking led to disruption in the supply chains. It led to shortage of sugar. The moment there was shortage, the price shot up from 45 rupees a kilo to about 65 rupees a kilo. So, to my mind, solution, Vineet, is very simple. What the central government, in coordination with the state governments, need to do is to crack down. And I came to know that when it comes to crack down, let's say you have to burst open a warehouse or probably a dump where people, some of these hoarders may have stocked sugar. Corruption comes in. So I think ground level efforts are needed by the state governments here to crack down on these hoarders, because these hoarders, what they do is they start black marketing. It becomes an investment like a stock, like a share, that I'll buy when it's low and I'll sell when it's high. So I think that disrupts the supply chain. If a particular hoarder hoards, let's say one lot of supply which goes to the industry, which goes to a particular city, it will obviously lead to a shortage. So I really feel that this shortage may not be real. It may be artificial, because we are not a sugar deficient country. We should understand that. I mean, for the last so many years, we are definitely, as you said as well, we are definitely not short on sugar. So where did the sugar disappear? Because price rise can only happen if there is a shortage. I mean, price is a game of demand and supply, and that's basic economics. So I think when the supply started getting squeezed, obviously the prices started rising. Otherwise, who will pay for a higher price if the supplies are normal? And this is my show number 6 since morning on sugar today. Since morning today, what I've found is that sugar, what the doctors tell, is mixed with sulfur, and the sulfur sugar is detrimental for your health. So my suggestion was that people, instead of using sugar at home, I'm talking of the consumers, the retail consumers, they can start using jaggery. They can use, something which is called bura, khand, or other forms of sugar. There are alternates of sugar available, but the biggest question is that where did the shortage come from? Was it the cultivation which was less? The answer is maybe no, because there is no shortage of sugarcane production in India. Was it diverted to ethanol? Your data says no, because that is a totally separate. Ethanol is being made from other grains as well. Sugarcane is not the only item which is probably responsible for ethanol. So it is to my mind, hoarders and black marketeers. That's where the answer lies. We need, and which I feel with the enforcement agencies being active, is not difficult to restore.
You're quite right, Dr. Kohli, and I always appreciate your perspective. You have given us a very vivid picture of what's really going on. Thank you so much for joining us. Well, we'll take a short break on that note. Be right back.